The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
And welcome back to Market Talk. Joining us on the program to go over what we're seeing in the market trade midweek. Joining us on the road, on the phone. Still happy to connect with Mike Zuzolo from Global Commodity Analytics. And Mike, thanks for taking the time to join us once again here today. I know a busy travel schedule for you. Where are you headed today?
Well, we're headed to a corn and bean expo at the University of Nebraska in Lincoln, Jesse, and it's a big program and it's a very timely program. And I didn't want to miss the opportunity for you and I to chat because of the fact that we are starting to see some movement over in China. And I think that's a pretty big deal we want to keep track of here as we get into the second half of January.
I'm glad you brought that up. That's a great place for us to start. I saw that headline this morning, a lot of stimulus by China's government into their economy. Talk about what exactly are we seeing, what's going on. Give us some of the details and what you believe is happening here. What are you seeing right now?
Yeah, we've seen now 2 nights in a row in the overnight markets that China has stepped into the Hong Kong equity exchange and said they were going to help solidify that exchange by essentially backing it by throwing at it about 280 billion US dollars. That was 2 nights ago. Tuesday night, Wednesday morning, they came back in and said, we didn't do a good enough job. The equity markets are still slipping in Shanghai and in Hong Kong. We're going to go ahead and lower the reserve requirement, what banks in China have to hold. And we're going to take that down. We're going to take that to a tune of over $100 billion, starting essentially on February 5. And so it says to me that the Chinese government is ready to backstop this marketplace and this equity market in a big, big way at this stage of the game, Jesse. And I think that's a really key piece of the puzzle, because if we go back to San Francisco, we've got the U.S.-China trade thaw. We come out of the Taiwanese elections with no serious ramifications in terms of the relationship between the U.S. and China. Now China is moving because they see the problems that they have in their own economy, and they're moving in a very dramatic fashion. Wall Street Journal said on Wednesday, many economists and financiers were not expecting this latest move. That's really good news for the commodity bull, in my opinion, that investment bull that you and I have been talking about. So I want this to be a type of launch pad for that wheat and crude oil-led rally at this stage of the game, and that obviously entails a strengthening Chinese currency and a weakening U.S. dollar.
Well, and to those points as well, the U.S. dollar down a bit on Wednesday. We did see some of the good gains hold in Chicago wheat, KC wheat. I know Chicago was the upside leader, up double digits. I think that spilled into corn a little bit. Crude hanging around the $75 barrel mark. The stock's kind of quiet, I guess. To the China news, Mike, I'm a little curious that there wasn't more fire maybe in some of the outside markets, a little more risk on, but maybe is it kind of a delayed, launch pad, to your point, so to speak, here that we could be seeing?
Yes, I think that's a really good manner and way to set it up in terms of how I'm viewing it, Jesse. I don't expect it to just blast off, because we do have the stocks issues, the levels, the improved weather in South America, the harvesting in Brazil. Those things we still have to work through. But when it comes to I think a lot of the Asian markets and European markets have been going over to the United States and to India and buying into those markets instead of China. So it would make sense to me that we would see a rotation out of U.S. equities back into Hong Kong, back into Shanghai. And if we saw that, I think the investor would say, okay, China is doing everything it can, plus to be able to not have that 1990 style deflation that we're worried about like Japan had. And I think that's really the stair step mindset that I would go with. But I will say this, given what we've seen now this week, it would be a huge disappointment for me to see the corn and wheat especially, but even the soybeans finish lower on the week, especially given that corn has been down 5 weeks in a row. It should not be that tough to get a higher close out of corn especially.
Well, corn hovered around this 450 mark in the front month March contract. Do you look at some of the later contracts, though, here for corn? July in that 470 range. Deese corn, new crop is in that 480 range. I know these aren't phenomenal looking prices considering where we were. A lot of farmers are a little bit upset or disappointed with where we're at, but it almost feels like these markets are building, in the process of building, or have found a pretty good base here right now, especially maybe this corn market. Mike, what do you think?
Yeah, I mean, from a standpoint of the managed money funds, it should be about the corn because they're net short over 260,000 contracts of futures and options, in the lowest since June of 2020. I would also say in the near-term corn market, I put out a text blast to clients and subscribers today during midday saying, okay, if we can go above 451 and a quarter on a closing basis in that March corn, that takes us above last week's highs. Maybe start looking at getting some basis contracts locked in anticipation of the futures market trying to rally 25, maybe 35, maybe 40 cents, and not let that basis get pulled back because of the futures rally. So I think that's step number one. As far as new crop, Jesse, the situation got a lot cloudier with some private trade estimates that came out on Tuesday, with putting corn up there and in what I view as the stratosphere as far as planted acres when it comes to cost of production, corn versus beans, and also the rotation. And so, to have a private trade guest come out that puts you at about a 2.8 billion bushel carryover for this upcoming marketing year, it would make sense to me why the bull spread would be working in the corn. And I would think, along with the demand side and the end users being a little bit tight now on supplies, that bull spread should again be something that we see kick in. I'd be disappointed if it didn't.
On the soybean side here, I know we've been doing our best to put in a little bit of a rally off the $11 handles that we were putting on some of these contracts here a few sessions back. Bean oil, though, kind of collapsing a little bit on Wednesday. Have to wonder, did we get some EIA data that maybe had an influence there, or was there something else that was maybe weighing on the product market a little bit that kind of pulled on the soy complex as a whole back to around unchanged on Wednesday, Mike?
Yeah, I think it was two things primarily, Jesse. One was the EIA distillate and refined fuels numbers. They were just ballooned, and that was on the heels of a big drawdown in crude oil stocks. And so we just didn't see that follow through in the crude oil market either. The second thing I think is probably more pertinent to the overall market, cosmetics, is one of the biggest problems we've seen is China, their hog market, and that means their bean demand. That means their meal side of the equation. And the soy meal has been a real tough situation for these oilseed traders in the last, roughly 5-6 months. So it was nice to see the meal go back to an inverted market with the March over the May contract. Not sure if we settled there because I got out of the office before the settlements, but it's important to watch that because that tends to bring the investor class futures is the premium market compared to the next contract. And so I would suspect we probably started to see some oil meal spread unwinding. But I think you bring up a big point. That is something that we have to really watch, especially given that maybe meal got a little extra boost as well. And maybe corn did as well from the Argentine dryness that started to be talked about in Chicago.
We're talking today with Mike Zuzolo from Global Commodity Analytics. Mike joining us on the road on his way to Lincoln, Nebraska today. And Mike, we look at these markets right now. One other thought that you kind of alluded to this here already. We have the China issues on one leg of the stool. We still have South American weather. You mentioned the Argentine dryness. But I know the acreage battle in the U.S., I don't think it's too early to start talking about that. We're already seeing some of those estimates out. I know we got some of those estimates from Farm Futures earlier the week, and they're calling for instance, spring wheat acres to be down almost 19% year over year. So I have to wonder, things like that, could we potentially see a big fight between corn and soybean acres with some of those marginal or fringe acres potentially having an impact on other crops. I guess I think that the acreage battle is something we could already start thinking about maybe in these markets. Would you agree or not?
Oh, yeah, without a doubt, especially when you throw on top of that spring wheat acreage number, the winter wheat acreage number that USDA has given us. And it really does reinforce my attitude and my analysis that it really does, that being the major low, really does stocks this year in wheat, and it sure doesn't look like it by most accounts, including mine here domestically. I think as far as the row crops, Jesse, it's time to talk about it, but that's where, some of these private estimates that are taking corn acres only down 1.5%, maybe 2%. I'm just not there based upon my conversations with clients in the primary corn belt, meaning they're just getting hammered on their cost of production for 24, and not a lot on the instance right now is to build soybean acres, and that bean corn ratio sticking up above 2.5 here this week. Number one, it puzzles me, and number two, it really makes me think we're going to keep building soybean acres in the month of February if that base price ends up being so supportive to the new crop soybeans. $12 beans and a $400-$500 break even per acre. You can make better money on that by most of the university numbers I've looked at compared to $4.50 corn and the kind of cost of production that's running, $7, maybe even over $800 an acre, depending on where you're at in cash runs.
Mike, let's talk livestock a little bit here, and then we will let you go. Cattle and hog trade a little bit higher on Wednesday. In the case of this cattle market, cattle on feed numbers out last Friday, pretty much in line. Nothing really surprised me there, so I think the markets have kind of taken those numbers and moved on already, potentially. What's your thoughts with how this protein sector has been acting so far this week?
Closely, Jesse, given that the February contract is now running $4+ over the mercantile cash index, and the cutout, while staying supported, it's not really moving that much to justify this kind of a move fundamentally in the hog complex, if you ask me. And so hogs are a big issue from a standpoint of pressuring the cattle, maybe at the end of the week trade. But I got to give cattle their due. The box beef prices have stayed high, and Tuesday was a very big technical day from a standpoint of going back below the 52-week moving average in the fat cattle market and then being able to come back up above it on a closing basis. I'm hopeful that the end of the week trade, if the hogs don't get in the way, the cattle can try and stretch their legs. But I'd be really on the hunt here in the next week or so to get some Q2 marketings hedged with some bought puts if I get another $3 to $5 rally in those fats.
Yeah, and I'm curious too, with the China issues, how much, that could continue to parlay itself maybe into our hog market, or what could that do for demand overall for commodities, for meat? Will we have to lean more on the meat side, maybe on domestic demand possibly moving forward, or some of our other key trading partners for exports? I think to kind of tie back into China thoughts here a little bit more, there's a lot of questions I have on the beef and pork side when it comes to demand moving forward.
I'm in the exact same camp, and I think that's why that dollar versus the offshore Chinese yuan is so important and pertinent to the livestock trade in 2024 as a whole, because if we don't cool the dollar down and the Chinese currency weakens and the Brazilian currency weakens, that's just going to stoke our imports and really hamstring our export market. But if we could unwind this recent trade of a real weak currency in the Chinese market, where it's been at a 9-10 week low against the US dollar until these last two moves by China, that could really stoke our export market and really hem in the Asian and the South American imports in particular. We'll still probably get quite a bit of imports from Canada and Mexico, but it's really Brazil and Australia that I'm most concerned with when it comes to the beef side of the equation.
Mike, great thoughts, great stuff. Anything final you want to share or reiterate with folks today before we let you go?
I can't stress and emphasize enough those that have been following you and I on the Market Talk how important this Chinese stimulus is to awakening the investment demand in the commodities. And so we're really in an important phase of this market. And this has got to be a situation, I think, Jesse, where the demand side of the equation kind of wakes up. But if it doesn't, I think it'll be a very big missed opportunity.
Fantastic. Well, and I know folks could find you online, globalcom with 2Ms research.com. globalcomresearch.com. With that, Mike Zuzolo, Global Commodity Analytics. Mike, always great to talk with you. Really appreciate you taking the time to join us on the phone today while you're traveling. Safe travels to you. We'll talk to you next week.
Wouldn't miss it, Jesse. Thanks so much for having me and working with my schedule, sir.